into growth platforms is going to be our panel over the next 30 minutes. Please welcome to the stage Oliver Kidd, the founder of Archer, Annalyn Singson, the Vice President of MasterCard, who will be our moderator, and Shihan Rajakumar, the Head of Proposition, which, as I just said to him, sounds like something that would freak out the Head of Culture at AMP Bank. So come up and give me your proposition. Ladies and gentlemen, please put your hands together for the team to talk about card solutions as growth platforms.
We already failed the first test. We had to sit in the same order as our pictures on screen. Good afternoon, everyone. I'm Annalyn Singson from MasterCard. Thank you so much for joining us. We have a difficult session ahead of us because we are the after lunch session, and I know there's so much excellent networking going on outside, so I do appreciate you all taking the time to join us today. I'm joined by two extremely valued partners of MasterCard. Oliver Kidd, who's the founder of Archer, a Melbourne-based fintech that serves the SME and mid-market segment, and also Shihan Rajakumar, who is the head of propositions at AMP Bank. While we will be talking about cards and how they can drive engagement, given the expertise and the focus of these two gentlemen next to me, we're also going to dive a bit deeper into what we can do to serve or better serve the SMEs in Australia. They are, we often said they are the backbone of the Australian economy. And as an economy, we are focused on productivity, driving new employment for Australia. And so I think it's a good time to focus in on SMEs. So what I will start with is a question for Shihan. When I think of fintechs, I don't often think of AMP. AMP is a really established Australian business. So, but AMP chose to establish a banking proposition and operate like a fintech. Why do you think AMP made this deliberate choice?
I think, so we definitely made that deliberate choice to stand out and be different. We recognised that SMEs in Australia were being underserved, and particularly the small to micro end of SMEs. So we're talking, less than 19 employees. Most of the bigger banks in market say they have a business offering, but it's a cookie cutter approach. It's a one size fits all. Those products are sort of sent out, and as soon as you have an ABN, that's the product that you get, and you also get the fees and charges that come along with those business products as well. And even the service is skewed to only the enterprise end. So they get they pay for the business products, but they're not getting served like enterprise customers. They're in talking to AI chatbots like the rest of us that aren't making very much sense and going around in circles. So we felt that there was an opportunity to really go into that segment. And to do that, we needed to do it very quickly, and we needed to partner with other fintechs to be able to do that. So we partnered with Engine, which is Starling Bank's software as a service spin-off, and we were actually able to launch a digital bank in less than 12 months, and that's no small feat. And to do that, we had to operate like a fintech. I mean, I think it's unheard of for anyone to stand up an entire digital bank in less than 12 months. And so really to operate that way, to get the right level of governance, compliance, risk, and to operate with agility, we've really had to adopt that fintech mentality. And part of that fintech mentality is also partnership. So knowing about what we need to do ourselves and knowing where we can get scale and efficiency through valuable fintech partnerships. Yeah,
that's a very different way of thinking partnerships, growth through partnerships. So sticking with you for now, you launched your Go banking proposition earlier this year. What's the most surprising insight that you've learned about SMEs or your customer base in general?
Yeah, I think it's a good question. I think one of the most surprising insights is obviously we've come to market with quite a strong SME proposition. We've gone with, no fee transactional banking because we know that they're the small and micro end of town, and they're doing it tough at the moment in terms of cash flow, in terms of margins. So we really wanted to make sure we're there supporting SMEs, so we've gone with no fees. I think one of the most the insightful things that we've learned sort of over the past 12 months is how hard it is to get business owners to switch, regardless of their size. I think an interesting tidbit I learned was the average banking relationship is 5 years longer than the average marriage in Australia. So, you know, we're more loyal to our banks than we are to our partners, so that's an interesting stat that I thought. But yeah, really from that perspective, like, I think the opportunity to get small business owners to switch is really tough. You have to get them at the right time, you have to get them with the right motivation, regardless of how good the offering is or how much value you're providing.
Yeah.
It's really difficult to get people to switch. So I think as an industry, we need to make it easier for people to switch their banks and switch their offerings. And we need to make sure that we can do that in a way that's seamless and easy for the small business owner as well.
Having worked with Shahan for a little over 6 months now, I actually now, based on that answer, understand why your title is the head of propositions.
I probably should say product propositions.
Product
so
propositions.
people don't get that.
Same question to you, Ollie. Archer has been in market now for 3-4 years. What's an interesting insight that you've learned about your customer base that you didn't know at all until you got into launching Archer?
Sure. I think like one of the big things we learned, which was more of a hypothesis when we started, was that SMEs or like that kind of smaller end of mid-market and SMEs would be quite comfortable to pay in exchange for saving time in their business. And we've spent a lot of time trying to understand how we can quantify the time that, and for those that don't know, Archer, we're a commercial credit card platform that sits sort of outside of a banking relationship or alongside a banking relationship. And we really think that by building a very functional commercial credit card offering, you can save all businesses a huge amount of productive time internally. And I guess when we started the business and went to market with that, we thought if we can just make it easier to issue cards, control cards, manage team spending, all that sort of thing, business owners will pay for that because you're saving costs across obviously a range of overheads, including bookkeeping, admin, headaches in general. And so I think we've found a very good way of kind of quantifying what that's worth to a business owner, and particularly in that SME end of the market, it's a huge headache, and it's generally kind of managed between a bookkeeper and a business owner. And like Shahan said, there's not a very good offering from major banks in that space, and there's still not really.
Yeah. And actually, looking at cards as engagement engines, kind of on that point, how do you tailor your messaging to speak to the bookkeeper or the finance person in a small or medium business?
I think it's about making their lives easier and helping them do the jobs that they're there to do. So primarily it's about trying to automate that receipt tracking process or connect the accounting system to an expense management system to the cards that actually can be used, putting those cards out in market for their employees to use in a way where they're lining up with the expense policy that exists in the business, and so removing that headache and then empowering bookkeepers and accountants and others to be better at their jobs and be better advisors to the customers they work with.
To you, Shahan, you touched on partners before and partnerships and growing by partnering. What have you learned about partnering with other fintechs to accelerate your growth and accelerate your delivery?
There's definitely been a lot of good learnings. I think, partnering with fintechs, you get incredible innovation, you get pace of delivery, you get different thinking or non-traditional thinking to how the banks would usually operate. But I think what we've learned along the way is that the most successful partnerships is when you align your outcomes. And that's really around making sure you're both there to solve a pain point, and you're both there to really understand what SME customers need and what pain points you can solve together. So I think it's, from a partnership perspective, it's not just about aligning the tech, it's about aligning the outcomes and being transparent and staying, you've got to stay flexible as priorities shift. Because I think that's one thing that you go into it knowing that things are going to change. And so you need to be flexible with your partnership approach, and you need to be flexible with your deliverables in order to make sure you still meet that. And a few other things that we sort of learnt along the way is definitely to start small and then test and iterate. So, where you can look to get to market with an MVP or get to market quickly, get feedback from customers or get real data, and then invest in a growing solution. And then another big thing I think is also the cultural alignment between the teams needs to be really, really aligned. And I think that's one of the great things working with MasterCard as well, is that the cultural alignment between both organisations was very much aligned to delivering that program in market as quickly as possible and with the right solutions. And, we were very lucky to go and be the first in market to launch a numberless debit card.
Yep.
And that was a huge advancement for us and something quite simple and just came from different thinking and aligned values between two organisations.
Thank you for that, and that's a nice plug for our numberless cards that we launched with you guys first this year, and we're partnering with more issuers through the course of the year and beyond to scale that. Partnerships are very important to MasterCard, and I appreciate both of you with how open you are in working with the MasterCard team, because I think you're right. Aligned goals and problem shared is a problem half, makes both of our businesses stronger. If I could pivot a little and back to you, Ollie. The elephant in the room, or perhaps in many rooms where payments professionals are, is that the RBA is currently proposing some changes that will impact the payments industry. What's your view on the proposed changes and how that would potentially impact product offerings that you and all the industry will offer?
Good question. I think, like, in principle, speaking from a commercial card issuer and a fintech, which is kind of how we see ourselves as commercial cards and fintech, and obviously as a small issuer, I think one of the challenges is that, and we obviously are particularly looking at interchange levels and that sort of thing as far as the broad range of propositions that the RBA is contemplating. But on interchange, I think the challenge with the newer proposed interchange caps is that I think that it would have a disproportionate effect on commercial card issuers and on small issuers. Clearly, Australia has a very centralised banking and payment system with a couple of large banks with a lot of the volume there. And so our concern from Archer is if caps are lowered to the proposed rates, that would have a disproportionately large impact on smaller issuers and also on commercial cards in general across all commercial card issuers, because it is a very expensive product to run. You're serving complex customers, multi-group entities, multiple cards. It's a very different proposition. And I think that's really important as well, is when we think about like payment alternatives, again, speaking like specifically to commercial cards, the alternatives to a commercial card are I think quite negative for the Australian economy. If commercial cards become less available, and that would be our perspective on what would ultimately happen, is they become less investable and more challenging to build. But if commercial cards become less available, the alternative payment processes are invoicing for the merchant, so invoicing the business. It's functionally a B2B payment method, or reverting back to more common reimbursements taking place with employees. We think that there's somewhere in excess of $5 billion sitting on employee balance sheets at any one time that really is company spending. It should be made on behalf of a business, and that money is just sitting waiting to be reimbursed. That's money that should be in the economy. That's money that should be being spent on commercial credit cards and not having lower middle income employees take that burden.
It also talks to the point that you made earlier about making things simple for the small business and saving them time. And if your value propositions get narrower, then it takes away the utility of a card for that business to grow.
100%, and I think that that's our perspective on commercial cards in general. Is it's an accounts payable tool. Really, it's a way for businesses of all sizes to make B2B payments and give their employees the tools they need to do their job and to spend and whatever else. And so I think at the end of the day, then it's just a productivity question. I think that if those types of products become less available, and at a minimum, I would say they're less likely to have big money put behind them to improve those products and make them more accessible to businesses, and it's an accessibility problem as well, then businesses will have to revert to less efficient means of payment, and I think it's a net negative effect, definitely.
Yeah. This is going to be a cheeky question, and I'm not sure if I prepped you for this one, so apologies if not. If regulation, any regulation you can choose, suddenly disappeared, Ollie, what innovation would you rush to launch and why?
Yeah, I'm not prepped for this question, maybe. Well, I think that like us as a business credit card issuer, like in all honesty, like that's just our sole focus is issuing more commercial credit cards. I think it's just such an interesting offering that's really not done very well in Australia. It's still very, very hard to access, and the type of product that businesses need to get more access to. I think if regulation maybe were to disappear, I think maybe we'd have faster rollout of things like open banking and those types of products. And I think that would allow people to get access to commercial loans, commercial credit cards, those types of products quicker. It would allow, to Shihan's point, easier, maybe make switching easier. So I think that it would certainly, I guess, lubricate the process for a lot of different products that already exist. But I don't think there's a product that I would rush to launch that I can't because it's illegal.
Yeah, and I'm certainly not advocating for no regulation, because I think regulation does help as long as it encourages competition and an even playing field. A question to you both, if also a little bit cheeky, if you had to kill one traditional financial product, Shihan, I'll start with you, what would it be and why?
Oh, good question. Look, I think from an SME perspective, cash flow is king. And I think the traditional overdraft in its current form is probably one that is an outdated product, and there's probably better alternatives in market that can be used to serve that cash flow need. I mean, generally speaking, most overdrafts are quite clunky, and they're quite expensive as well. There's line fees and other fees associated with them, which make them not necessarily the best thing to hold on to if you don't need it or if you're not utilising it. So personally, I think the overdraft is something that's ripe for change and could be done in a lot better fashion.
I won't hit you up for what your idea is to replace it, not yet anyway. And Ollie, question to you, what product would you kill, a traditional finance product?
I think, maybe I don't have a very compelling answer, but I just think there's honestly not a lot of, there's not a long list of SME financial products that exist today. I think there's probably not enough of them.
Yeah.
And so, when I was thinking just now about like what you might kill, you've kind of got your overdraft, you've got credit cards, you've got commercial loans, maybe invoice factoring businesses, those types of things. But I just think so many of them are so important. I agree with the clunkiness of overdrafts, but I think the real thing that really needs to happen is, even when those products exist and there's lots of them in market, SMEs still actually struggle to get access to a lot of those products. And so I don't know if there's something that I would race to kill, but I think that it's really about killing that access problem of making sure that people can actually get access to I think honestly quite a limited range of financial services products that exist for SME businesses at the moment. Yeah,
the bar to entry is quite high for even the most basic of
it's a very long access process and very complex in a lot of cases,
we can't have a panel without talking about AI. So Shihan, how are you guys at AMP using AI, and what kind of, innovations are you thinking about implementing with AI, especially for your customer base?
Yeah, at the moment, most of our AI innovation is internal and procedural. So we're using AI to help quality assure calls and provide real-time feedback to agents as they're speaking to customers, rather than having to flip through a 100-page SOP to try and find the right answer. We're using AI to actually real-time translate calls and then provide suggested solutions to the agent while they're speaking to the customer. So it's all about being able to provide real-time, useful, timely solutions to customers in a single call resolution, and also making sure we're providing the right information to those customers. So that's one active use case very much at the moment. I think AI will become the future of the financial industry, and how banks and others use that to overall improve their proposition, we're yet to see. I think there is a massive agentic AI opportunity, but we need to get the balance right in terms of making sure that it's compliant, making sure that it's done in a safe and secure way, and that the use case is there to support as well.
Yeah. And Ollie, same question for you. How is Archer thinking about AI and adding value to your value proposition?
I think it's two things. One, obviously, customer-facing products that we're bringing to market to help businesses manage. We have a lot of companies that issue hundreds of corporate credit cards to their employees, and they can be quite unwieldy programs to manage. So I think helping finance teams in those businesses do their jobs a little bit more smoothly and understand, is this transaction sitting inside an expense policy? Should it be approved under the expense policy that exists? So giving our customers the capacity to take rudimentary PDF expense policies and put them into our platform and allow, the right checks to have occurred on those transactions that are going through the platform, and taking away that overhead of, okay, I've got to make sure every transaction that comes through here is within policy, just kind of making that process a little bit more smooth.
Again, to that point about saving time.
Exactly.
Exactly.
And I think that's the main currency we have with our customers, is how much time have we saved them. And if we're thinking from just a purely commercial perspective, we just know that's what people will pay for, is if you can save time and save overhead and save energy, people are getting a lot out of the product. The other area is just internally is onboarding customers. Customers, particularly in the SME space, have different versions of financials that they might submit to get access to a commercial credit card, often in different states of, completeness maybe.
Mm-hmm.
And so being able to review those and understand, are these authentic? And then also making quicker decisions on whether someone, what the size of a credit limit should be on a commercial credit card program, what the risks might be. And I think also as open banking and access to bank accounts and transactions flowing through customer accounts becomes more readily available to other institutions when a customer gives that access, I think there's going to be a huge human bottleneck in actually getting anything out of that information. And so being able to monitor customers' performance, being able to understand how a business might be performing without having to have an account manager or someone else go through or wait for an update on somebody's credit file, because that's also reactive.
Yep.
So being able to be more proactive in terms of managing customers and understanding performance of customers is something where I think there's huge leverage to be had.
I think the credit approval process and AI enhancing that is vital, because it'll get credit out to where it's needed much sooner.
Yeah, I was just going to say, I think it's quite topical at the moment. You shouldn't look to AI to reduce costs through reducing headcount, but instead look to use AI to make your existing headcount more efficient and more proficient as well, and provide more value.
Yeah, we're not yet going to be replaced by robots. Not yet, anyway. So with a few minutes left on the board, I'd like to wrap up with thinking about the future. So I'll start with you, Shahan. What's next for AMP? What's down the road, and what are you guys watching out for in 2026 and beyond?
Yeah, so we are on a rapid growth trajectory. So next for us for Go really is to continue to launch our product suite. Unfortunately, I can't say publicly what those future products are, but stay tuned. If you haven't downloaded the app and had a go, please do have a go. Shameless plug. Great personal and SME banking. No fees, no international currency conversion fees, and Qantas points on your balance. First of its kind in Australia, so please give it a go and tell us what you think. And we're really looking to grow that out, and I think the approach we're taking is really to listen to our customers and iterate very quickly. Mm-hmm. So the more users we can get on our platform and using us and giving us valuable feedback, I think that is incredibly important for us. Sort of into next year, what's really, I think, a watch point for us is really how open banking and AI evolve. I think they're two big opportunity spaces in fin services in the industry, and I think both can do quite impactful things if done the right way.
Thank you. And sorry, Ollie, I should give you the opportunity to plug your business, given that Shahan has. No, seriously, what's ahead for Archer, and what's on your mind for 2026 and beyond?
I think from a product perspective, it's a lot of the functionality we talked about a second ago. It's like getting that into the hands of customers and allowing them to run their businesses a little bit more efficiently. We've got a lot of really exciting features coming down the pipe. And we also have some, again, unfortunately can't get into detail, but very exciting partnerships coming down the pipe as well, where we're trying to get more in front of our customers where they are every day, where they're already transacting, and make it easier to manage that spend on a much larger scale. So yeah, it's certainly some really exciting things coming down in 2026.
Okay, well, With that, we are just about at time. So we have a couple of minutes for questions if anyone has anything to ask any of our panellists today. Nothing about propositions? No.
Here's your chance to plug yourself, Annalyn.
Me?
Yeah, what do you got happening at MasterCard?
Oh, sorry, there is a question.
Oh, there is a question. Oh, up the back. All right. We've got a mic coming.
So my question, first of all, thank you for a fascinating panel. Question about, we've talked a lot about commercial cards and the way that relates to broader, SMEs and an engine of the economy. Do you think that the division that we've traditionally seen between commercial cards and indeed commercial lending and personal lending, is that an absolute barrier and there need to be different companies providing things on different sides? Is there a reason we haven't seen more convergence between them? I'm just curious as to kind of how those different elements may or may not be converging.
Sure, thanks for the question. Well, one thing that immediately comes to mind off that is a lot of our customers will come to us and say, gosh, it's so great that I can issue these cards to my staff. I'd love to give these cards to my kids and be able to track them in the same way. But I think that there's the barriers to doing that across multiple different categories are certainly lowering. And I think all of the functionality that, speaking from a commercial cards perspective, a lot of that spend management, a lot of those controls around cards, they're analogous in other categories. So I think there's the same need that sits across multiple areas. I know in the US there are businesses that are starting to come out now offering, sole traders merged debit card accounts for their personal transactions and then a corporate card account for their business transactions. And so I think that naturally that gap will start to erode and people want to offer products that sit across, particularly in the S end of SME, offer like multimodal products that can serve their personal life and their business life because, speaking even just purely to rewards, which is such a critical part of many commercial card offerings, that is just such an inherently personal thing for a lot of small business operators in terms of how they think about the rewards they get.
The way we think about it at MasterCard is many small businesses are the individual. I am my business and I am a person. And we are looking at designing products that can help manage that all in the one, but there's still some delineation between personal and business, and that's just about data and data segregation and managing it in that way. And also, I guess, being flexible enough to allow the individual and the business to manage it in the way that they'd like to manage it, because some do certainly like the separation of home and state, I guess. On that, we are right on time. The screen is flashing in front of us. Please join me in thanking my fellow panellists, Oliver and Shahan.